You file your taxes, you hit submit, you breathe out, then weeks later, you get a letter. We're auditing your return. Not fun. But here's the thing most people don't know. IRS audits aren't random. They're based on patterns, red flags, and something called the DIF score, a system that ranks returns based on how risky they look. The higher your score, the more likely you'll get a second look. Audits don't always mean you did something wrong. Sometimes it's just a check to verify your numbers. So in this video, we're breaking down the biggest IRS audit triggers, what they are, how they show up, and how to stay off the radar. 1. Unreported income, freelance gigs, crypto profits, bank interest. If someone else reports it, the IRS gets that form too. Forget to include it, they'll notice. Imagine a tax return with a missing puzzle piece, and the IRS holding the last one. If they know you got paid, you should too. Even small side hustles count. 2. Deductions that don't match income. Let's say you earn $40,000, but deduct $30,000 in business expenses. Not illegal, but very suspicious. The IRS compares you to others in your income range. If your numbers look way off, you might get flagged. Let me give an example. A dog walker deducting flights, designer headphones, and research snacks. Claim what you're entitled to, but keep it believable. 3. Home office deduction. Yes, this is allowed. But wait, no, your dining table doesn't count. To qualify, your workspace must be exclusively for business, your main place of work. If it's a shared spaces, it's a red flag. Later in this video, there's one audit trigger that's easy to miss, even if you're doing everything right, and it catches a lot of people off guard. Now, number 4 trigger, charitable donations. Donating is great, but if your donation equals 25% of your income and you're not a millionaire, that might raise a flag, especially for non-cash donations like clothes or furniture without proper valuation. Be generous, but stay documented. 5. 100% business use of your car. Almost nobody qualifies. Even full-time drivers run personal errands. Saying 100% business without logs looks sketchy. Use mileage tracking apps. Be honest about usage. Claim 70%? Say 70%. It's fine to be real and way safer. 6. Cash-based businesses. Hairdressers, food trucks, tattoo studios, landscapers. Industries that deal mostly in cash. If your income seems low compared to industry averages, the IRS might dig deeper. Track all payments, deposit regularly, and don't rely on memory. 7. Amending multiple returns. Changing your return once? Fine. Doing it often and always in your favor? Now you've raised a flag. Stack of 1040X forms. That's a pattern they'll notice. If you must amend, make it clean and double check it. 8. Crypto transactions. The IRS now asks directly about crypto, and exchanges like Coinbase send 1099s. If you've traded, sold, staked, or swapped, you need to report it. Crypto isn't invisible anymore. Track it, log it, report it. 9. Offshore accounts. Yes, you can have them, but if your combined balance exceeds $10,000 at any point in the year, you must file an FBAR, sometimes a FATCA form too. Penalties could go over $10,000 per year. When in doubt, talk to a tax professional. Now, you may want to ask, what types of audits do they do? See, not all audits look the same. Some are simple mail audits, just a request for documents. Others are office audits. You meet with an IRS agent. And the most serious, field audits, where an agent visits your home or business. Knowing the type can help you prepare and respond the right way. And what's that audit trigger that's easy to miss is excessive charitable donations, particularly large non-cash donations without proper documentation. So, how do you stay off the audit radar? File electronically. Fewer mistakes. Use tax software or a trusted pro. Report all income, even side hustles and crypto. Keep logs, receipts, and mileage records. Don't stretch the rules. File on time. And stay accurate. And remember, an audit doesn't mean you're guilty. It just means something triggered a question. Still with me? You're already ahead of most taxpayers. Hit subscribe and check out our next video. See you in the next one.